Hey everyone, today I want to talk about some real talk, some lessons I learned the hard way. It is about money, investing, and basically how I managed to lose a good chunk of my savings trying to get rich quick. I am not some guru, I am just a regular guy who made a lot of mistakes, and I want to share those with you so maybe, just maybe, you do not have to go through the same pain. Trust me, it is not fun. When I was in my early 20s, I was like a lot of you probably are now. I saw all these headlines, all these stories about people making fortunes in the stock market or with some hot new crypto coin. I thought, why not me? I wanted that fast money. My background was pretty normal, nothing fancy, so I thought investing was my ticket to something better, something faster. I had this idea that if I just found the right thing, if I just jumped on the right trend, I would be set. Boy, was I wrong. My first big mistake was chasing those high returns. Everywhere I looked, there were promises of quick and easy money, guaranteed profits, you know the drill. I fell for it, hook, line, and sinker. I did not understand the basics of risk, diversification, or even what I was actually investing in. I just saw the potential for huge gains and closed my eyes to everything else. I put money into things I barely understood just because someone, usually some random person on an online forum or a friend of a friend, told me it was going to explode. It rarely did, and when it did, I usually got out too late or too early, always on the wrong side of the trade. Then there was the whole following the herd mentality. Remember when everyone was talking about XYZ stock or that one specific meme coin? Yeah, I was right there with them. I would see something skyrocketing and think, I need to get in on that. I did not do my own research. I did not understand the underlying value. I just bought because everyone else was buying. This led to a lot of what they call buying high and selling low, which is pretty much the opposite of what you want to do in investing. It is painful to watch your money disappear because you got caught up in the hype. I have been there watching my portfolio drop like a rock, feeling helpless and stupid. Another huge blunder was believing in short-term speculation. I thought I could be a day trader, buy and sell quickly, and rack up profits. I spent hours staring at charts, trying to predict movements, and mostly just getting stressed out. I was constantly chasing the next big thing, flipping stocks, thinking I was smarter than the market. Newsflash: the market is usually smarter than you, especially when you are just starting out and have no real strategy. I made some small wins, which only fueled my ego and made me take bigger risks, leading to bigger losses. It was a vicious cycle of chasing adrenaline and then dealing with regret. I also fell for my share of scams. You know, those things that sound too good to be true because they usually are. I got involved in a couple of schemes that promised unrealistic returns with minimal effort. I wanted to believe it so badly that I ignored all the red flags. I ignored the fact that they were asking for money up front, that their business model made no sense, and that they had no legitimate presence. I was blinded by greed and desperation to make back what I had lost, and it only dug me deeper into a hole. Losing money to a legitimate investment gone wrong is one thing. Losing it to outright fraud is a whole other level of pain and embarrassment. And then there was the classic mistake of not understanding risk management. I would go all in on a single stock or a single type of investment. I thought, if this one takes off, I am set. I did not diversify, I did not set stop. Losses, I did not have any kind of plan for when things went south. I was essentially gambling with my life savings. When those investments tanked, they took a massive chunk of my capital with them. I remember looking at my bank account, seeing years of hard work just vanish, and feeling this immense wave of regret and hopelessness. It was a really dark time. My emotions also played a huge role in my downfall. I would get excited when things were going up, thinking I was a genius, and then panic when they went down, selling out at the worst possible time. I let fear and greed control my decisions. Instead of logic and a well-thought plan, this emotional roller coaster was exhausting and financially devastating. I learned that investing is not just about numbers, it is about controlling your own psychology. When you are constantly reacting to every market fluctuation, you are usually making poor decisions. After hitting rock bottom, after losing a significant amount of my hard-earned money, I finally had my wake-up call. It was a harsh lesson, but a necessary one. I realized that the get-rich-quick mentality was actually a get-poor-quick scheme for me. I stopped chasing the hype. I stopped listening to random internet gurus, and I started from scratch. I decided to actually learn about finance, about how money really works, and about building wealth in a sustainable way. I started reading books, watching educational videos, and following reputable financial advisors. I focused on understanding basic economic principles, the power of compound interest, and the importance of long-term thinking. I learned about different asset classes, how to assess risk properly, and how to create a diversified portfolio. It was not exciting, it was not flashy, but it was solid. It was the foundation I should have built from the beginning. Now, my approach is completely different. I am not trying to hit a home run with every investment. I am focused on steady, consistent growth. I prioritize saving, budgeting, and investing in low-cost, diversified index funds. I am not looking for 1,000% returns overnight. I am looking for reasonable returns over many years. I understand that wealth building is a marathon, not a sprint. It takes patience, discipline, and a clear understanding of your goals. I am also a big believer in emergency funds. Now, having a safety net of 3 to 6 months of living expenses saved up is crucial. It gives you peace of mind and prevents you from having to sell investments at a loss. If an unexpected expense comes up, this was something I completely ignored in my early days, and it cost me dearly. One of the biggest takeaways from my journey is that you do not need to be an expert to invest wisely. You just need to be patient, consistent, and willing to learn the basics. Do not get caught up in the complex strategies or the latest fads. Stick to the fundamentals, invest regularly, diversify your holdings, and keep your costs low. It is really that simple, even though many people try to make it seem complicated. I also advocate for setting clear financial goals. What are you saving for? A down payment on a house, retirement, a child's education. Having a specific goal helps you stay motivated and focused. It also helps you determine your investment timeline and risk tolerance. If you do not know where you are going, any road will take you there, but it might not be the one you want. So for all of you in your 20s, just starting out, or even if you are a bit older and feeling lost, please learn from my mistakes. Do not let the allure of quick riches blind you to the fundamentals. Do not trust anonymous sources with your hard-earned money. Do your own research, understand what you are investing in, and always prioritize protecting your capital. Building wealth takes time, and there will be ups and downs. But with a solid plan, consistent effort, and a patient mindset, you can achieve your financial goals. It is not about being the smartest person in the room. It is about being disciplined and avoiding the common pitfalls. I am here to share my experiences, the good, the bad, and the really ugly, so you can avoid some of those same bumps in the road. This channel is about giving you the tools and the mindset to make smart financial decisions without all the hype and the pressure. We are in this together, learning and growing. Now, let us dive a bit deeper into some of these specific pitfalls and how to steer clear of them. I mentioned how I chased high returns, right? The problem with chasing high returns is that they almost always come with high risk. It is like a fundamental law of finance. If someone is promising you guaranteed double-digit returns with no risk, they are probably selling you a dream or worse, a scam. I learned that the hard way, thinking I could outsmart the market or find some secret loophole. There are no secret loopholes. There is just hard work, patience, and a bit of common sense. One thing I really struggled with was impulse investing. I would hear a hot tip or see a news story and immediately want to jump in. I did not take the time to research the company, understand its business model, or analyze its financials. I just acted on emotion. This is a recipe for disaster. Before you put any money into an investment, ask yourself, do I truly understand what this is? Do I believe in this company or asset for the long term? Have I done my own due diligence? If the answer is no, then walk away. It is okay to miss out on some opportunities. It is not okay to lose your shirt because of FOMO, fear of missing out. I have had plenty of FOMO moments, and they almost always ended badly. Another aspect of my early mistakes was my complete lack of financial education. I went through school, got my degree, and not once did anyone teach me how to manage my money, how to invest, or how to plan for retirement. I was left to figure it out on my own, and I did a pretty terrible job at first. This is why I'm so passionate about sharing my experiences. Now I want to bridge that gap for others, especially those in their 20s who might be feeling as lost as I was. You do not need a finance degree to be good with money. You just need to be willing to learn and apply some basic principles. For example, understanding the concept of dollar cost averaging would have saved me so much grief. Instead of trying to time the market, which I constantly failed at, dollar cost averaging means investing a fixed amount of money regularly, regardless of market fluctuations. This way, you buy more shares when prices are low and fewer when prices are high, averaging out your purchase price over time. It is a simple, effective strategy that takes the emotion out of investing, something I desperately needed. I wish someone had told me about this years ago, and let us talk about diversification again, because it is so important. I used to put all my eggs in one basket, hoping that basket would take me to the moon. Instead, it often crashed and burned. Diversification is about spreading your investments across different asset classes, industries, and geographies. This way, if one area performs poorly, your entire portfolio is not wiped out. It is a fundamental risk management strategy, and I learned its value through painful experience. Think stocks, bonds, real estate, maybe a little gold. Do not put all your life savings into one hot tech stock, no matter how promising it seems. Also, be incredibly wary of anything that promises to make you rich overnight. Legitimate wealth building is slow and steady. It is about consistency, patience, and the power of compounding. When you see ads or hear stories about people making millions in a few months, remember that those are usually the outliers, or worse, they are part of a scam. Focus on building a strong financial foundation first, and then let time and smart decisions do the heavy lifting. I spent years chasing those impossible dreams, only to realize that the most effective path was the one I initially scoffed at, the slow and steady one. Another thing I wish I had understood earlier was the importance of taxes and fees. When you are just starting out, every dollar counts. High management fees, trading commissions, and capital gains taxes can eat into your returns significantly. I used to ignore these things thinking they were minor, but over time they add up. That is why I am a big fan of low-cost index funds and ETFs. They offer broad market exposure with minimal fees, allowing more of your money to work for you. Always read the fine print and understand all the costs associated with your investments. I learned that lesson after seeing a good chunk of my supposed gains vanish into fees I did not even know I was paying. And speaking of bad advice, be very careful about who you take financial advice from. In my early days, I listened to friends, internet strangers, and even some shady financial advisors who were more interested in selling me products than helping me. Always look for qualified, reputable sources. Seek out certified financial planners who have a fiduciary duty to act in your best interest. Do not just trust anyone who claims to be an expert. There are a lot of people out there who will try to take advantage of your lack of knowledge. I was one of those easy targets for a while, and it cost me dearly. My journey has also taught me the importance of having a clear financial plan. It is not enough to just save money. You need to know what you are saving for, how much you need, and by when. A financial plan helps you set realistic goals, track your progress, and make informed decisions along the way. Without a plan, you are just drifting, hoping for the best. I used to operate like that, and it led to a lot of frustration and missed opportunities. Now, I have a clear roadmap, and it makes all the difference. Finally, and perhaps most importantly, learn to control your emotions. The market will go up, and the market will go down. There will be good days and bad days. Do not let fear or greed dictate your investment decisions. Stick to your plan, stay calm, and focus on your long-term goals. This is probably the hardest lesson I learned, but also the most valuable. My emotional trading cost me more money than any single bad investment. Learning to detach yourself emotionally from your investments is a superpower in the financial world. I know this might sound like a lot, especially if you are just starting out, but trust me, these lessons are born from real experience, from actual money lost, and from a genuine desire to help you avoid the same mistakes. You do not have to become a financial wizard overnight. Just start with the basics, be patient, be consistent, and keep learning. My goal with this channel is to demystify investing, to break down complex topics into simple, understandable terms, and to share my journey, warts and all. I want to show you that it is possible to build wealth, even if you start with very little, and even if you have made mistakes in the past. It is never too late to learn and to turn things around. So, take these lessons to heart, do your own research, understand the risks, diversify your investments, control your emotions, and most importantly, do not be afraid to ask for help or seek out reputable advice. Your financial future is too important to leave to chance or to the whims of the internet. I am here to be that candid friend who tells you the truth. Even if it is a bit uncomfortable, I am not selling you anything, just sharing my experiences so you can make smarter choices than I did initially. Let us build a community where we can learn from each other, support each other, and grow our financial literacy together. Thank you for being here, and I look forward to our next conversation about navigating the sometimes treacherous, but ultimately rewarding world of personal finance.